Hi everyone, Adrian here, mortgage broker based in Sydney. On this channel we talk about all things lending, finance and investments. And on this particular video we're going to be focusing on a client that I had recently that was told no by another broker that they didn't have the borrowing power to do what they wanted. Now, let's read out the post and then I can talk to you a little bit openly about what happened. So, had a client come to me today who was told no by a prior mortgage broker because they held company debt. They were told their borrowing power wasn't high enough. The situation was this. Client had one property owner occupied and one plot of land with a DA to build 6 townhouses. It was a joint venture with client holding the land and the house in the company name that they were a director of, and money partners holding a caveat against the property and taking out a private loan on that land for development for the purchase. They wanted another refinance plus a cash out plus new approval for another investment property. Now, 90% of lenders will include this debt for servicing. So that means that if they go to any of the major banks, 90% of them will add whatever the loan is on that joint venture project, even if it's in a company name, they will add that to your borrowing power, and obviously that takes away from your borrowing power. I.e. they see the private loan added onto their personal servicing and therefore the loan size is too high and the client can no longer get the next loan that they wanted. But there are 2 or 3 lenders that don't include company debt. Now, let's talk about this openly. There's only 2 or 3 banks on the market right now that don't include the company debt. So if you don't... So I'll give you an example. So this client wanted to not only do a refinance, they wanted to pull money out up to 80%. Then they wanted to get a pre-approval for another property, which was an investment property, and then settle both. So settle the refinance, settle the pre-approval on the investment property and rent out everything. Now, the size of the loan, I won't go into specifics, but it was over $1 million, which if 90% of lenders add that onto your balance sheet and your liabilities, obviously there's a servicing component to those loans. And at the end of the day, most lenders will see that when they do the company search. So what happens is if we submitted to any one of these 90% of banks, they would do an ABN search, they would find this client has an active ABN, then they would bring up the company, they would do a company credit check, then they would see that even though the money partners had the loan, it was against a property that the client owned, and then they would add that to the servicing. All right, but there's 3 lenders that don't do that, which is great. So we've actually had this occasion happen quite a few times where we managed to get them with the right lender, get them submitted, and obviously in our loan notes we will explain what the situation is with the company debt, but we won't have to supply any documents because it's irrelevant. All right, because obviously any debt held under a company is if they default or anything like that, you're not liable in a personal name. It's under the company structure. All right, so that's how these lenders see it. Also, not many people know, but these kind of private loans on land for development sites, a lot of the time they're 12 to 18 month rolling structures where repayments don't actually come out per month. They're actually capitalized on top of the loan. So that means that the client isn't actually impacted per month with money coming out of their account to service the debt. It's just added on top and then accounted for when they build the townhouses and then they sell it, and then obviously they clear the total debt after everything's said and done. So this is just a quick video to focus on the clients out there that do have company debt in the form of commercial leases, lines of credit, car leases, anything like that under a company structure if you're a director. There are banks out there, and one of them's a big 6 bank that enables you to exclude company debt. So this enabled this client to know that there is an option to get lodged, and we can not only refinance, pull money out, but also get them another investment property, which was a great result, and the client was really happy. So this is just a quick video to get that good information out there. If you're enjoying the channel and the content that we're going through, please hit that like button, hit that subscribe button, leave me a comment, and we'll see you on the next video. All right, then, bye.